right? So we are lucky now that the market is actually just now short where we are. We just have to enter short if we're not already short. If we were short, I hope we were able to take profits at somewhere these levels, 153.11 and 153.3, and of course market did 152.7. Let's take a look at that structure. We have that on our analysis in detailed segregation form. So this is what we're looking at actually today. The market is extending in a wave 5, and usually when you're extending in a wave 5, you should resist at level 3. We're having here this segregation is correct. There is an A and there's a B. There's a 1, 2, there was a 3, the 4A, 4B, and 4C. This is moving down into a 5. That wave 3, if we see continuous negative momentum on the 1 hour, and at least even on the 4 hours, it means that it is extending. You're getting the 3-1, 3-2, 3-3, 3-4, 3-5, 3-6. Can extend nice swings. We have to be patient. The fact that we have a spike right now is an opportunity to sell into, and not, even if you're short, not to close out the position if you're not in good profit. You of course only do what's good for your account. So let's take a look now at the internal momentum picture, meaning that wave 3, if it is extending on the 4-hour chart, you can go all the way to 150, you can go all the way to 149. So we will take the best that the market will give us. So this is a 1-hour chart. It is extending, like you see. Even on the 1 hour, on the 4 hours, it must be extending. All right, and therefore the current market is a sell. All we'll have to do is do the internal segregations and sell into them if we are not already short. If we are already short, we hold and we take profits at the same market bottom or projection of 138.2 of that market bottom. Let's do the very internals now of this. Bear with us a few seconds until we get... So we don't really need to do the very internals because they stand out very, very clearly. You're having a 1 here and a 2, and that's internal 1, 2, a 3, 4, and a 5. This is high degree 3. This is of course a 4. Now of course this becomes, we think, very simple. You just want to sell level 4. Level 4 just rejected at that level here, 1. Current market is simply a sell, which is one. Actually it is 153.89, 153.9. The stop is just above level 4 here, 155.3. Now we learned something from yesterday, and that is not to be greedy and not go all the way to 149. You're saying of course double heads and some kind of a shoulder. This is a slanted neckline, no problem. We are back at the upper boundary of that elliott structure, but we learned yesterday always to take profits at 138.2. So for that level 2 to 3, correction in 4 takes you to 152.13 next time around. Now this is what a trend is all about. It's about going to work every day, getting into the trend on even maybe, I don't want to say blind way, but making sure that you know you are in a trending issue would simply mean that you sell below level 1, that's it, at whatever level you want to sell, and that you collect next day at 127.2% and redo the position every day. This is what the trend is all about. It's not about selling at this level 100, and sometimes all of us get greedy, but it really is not about selling at this level, just below level 1, and holding this all the way down to 150 and 149. There will be a lot of adverse volatility against us, and we will not really be doing what is best for our own account. So what is best for our own account is to take profits at the profit pitch, all right, which is usually 138.2 and 127.2. Okay, so we're looking at break below this neckline. Current market is a sell. The stop just here in order to be a bit diligent and set and forget the trade. Instead of having the stop above level 4, we can just have it above this part of level 1, 155.7, so that we don't get spikes, that's all. So it's 155.7. Entry is right now 153.97 or 154. The target is gonna be 152.13. We record the trade every day, so long as we're having degree 3 momentum on the 4-hour chart. What we're seeing on that 15-minute chart, this is simply actually a cycle top, a cycle extreme that we should sell into, because on the 1 hour we are about to get a zero line bounce down. On the 4 hours, which is more important, we are really negative. On the 1 hour, we'd also consider that we are negative. So long as this is in negative momentum, what we're seeing on that 4-hour chart can relate to what we're seeing here on that daily chart. If momentum breaks below zero, we're going to that oversold level. We're gonna break that neckline. We could actually test 50% between the two cycles. We now all understand the technicals behind such a move, and therefore we could consider that we're gonna be shorting this, taking profits at 138.2 all the way down to 145.50, this level here. Let's be realistic and not go all the way to the top of one, just 145.50. We would then understand that we're going to be doing the trade on a daily basis, just using these metrics. So long as we're having negative momentum on the 4 hours, so long as we're having negative momentum on the 1 hour, you just take a short on the 15 minutes using internal level 1 with a stop above a higher degree level 1. Take you to the next 138.2% projection. Actually, it is numerically guaranteed to work out and take you towards profit accumulation. So long as we're having these metrics in place, the market goes to 145.5. We want to check the weekly momentum. On the week, that is, okay, we'll check. So the market's already moving down now, 153.87. I believe we're gonna get some kind of a hangman candle, and we are down. Just check the high degree momentums. We're just beginning to become negative on the daily. On the weekly, this is the one that should give us problems. We could be getting a zero line bounce.